Good morning, everyone. It's Dan Bossy and Ben Buckner back at new crop year. It's the 2025-26 crop year. We turn the calendar on row crops. September 1st is the date. We are in a new crop year, and we finished out the old crop year. And so both wheat, corn, and soybeans are in a new crop year, not globally, but domestically here in the United States. Everyone hopefully had a long Labor Day weekend. It was enjoyable weather across the central U.S. Lots and lots of news. Of course, China left town in terms of Washington, D.C. without any kind of deal and really any progress. So now the market's starting to wonder when and where will the Chinese return with soybean buying from the United States. I'm rather pessimistic. The next meeting isn't planned till the end of October, November. So with that in mind, I'm doubtful that the Chinese buys anything. And in my estimation, we're missing, I don't know, 9 to 11 million tons of export demand. Ben, to me, that's the big news here coming back. The weather forecasts look better. Run us through in terms of what you're seeing and what you think for the markets today.
Yeah, so I think we're kind of starting out with maybe a little macro, synthetic Monday, macro Tuesday, and we've got a lot of news going on. So the legality of Trump's tariffs on China specifically are being questioned, by an appellate court, have been ruled illegal. I suspect that this gets kicked up to the Supreme Court and most likely, rules in Trump's favor, but we'll see. It's unknown. The policy uncertainty is back in the financial markets, shedding some premium because, of course, they don't like uncertainty. And tariffs will stay intact until the middle of October, so nothing really changes there. And we talked a lot about soybean demand in China buying soybeans, and I think the conventional wisdom, and this makes sense logistically, they've bought nothing so far. So if they were to start buying bushels of soybeans, tomorrow, it's 6 weeks before those beans, make it to China. And so you're already kind of looking at physical shipment data. We are into the middle of October now, if things were to improve. But to your point, we don't see any improvement on the horizon. So you kind of, if you go another 2 weeks, you're pushing physical soybean shipments into China from the U.S. into the month of November. And that's, of course, unwanted, even to the point where we've been kind of adjusting our U.S. yields a bit lower because of weather, but at the same time raising U.S. soybean and stocks forecast week over week because of China's absence. We've also got China, India, and Russia. China and Russia specifically cozying up to one another, signing some big gas deals, shipping gas into China from Russia through Siberia. So world orders continue to change. This has been something that's been going on for a long time, but does seem to be accelerating. Does that have an impact on China's demand for U.S. goods longer term, especially if there's not progress on a trade deal in the next couple of months? So macros do, I think, lean a bit negative in the ag space today. We do need some rain east of the Midwest, though. It's been the issue so far has been that rain that's forecast, the 11 to 15 day period in places like, Indiana and eastward. It doesn't really get pulled into the 7-day forecast. You see here on the right, NOAA's updated 7-day forecast. We do have some scattered regional showers, but more is needed. And so I do think it's important to recognize it will be another dry August, early September, at least in the eastern Midwest. So on the margin, I think we're kind of pausing on raising yields at least. And so there is some uncertainty with respect to the USDA September report. West, though, doing very well. On the left, you've got weekend rainfall, gauge measured accumulation. And so some pretty key areas of Nebraska, Iowa, Kansas, and even dots of Minnesota and Wisconsin seeing half an inch to up to 2 or 3 inches. So those were finishing rains. A lot of the western corn belt in the Dakotas have seen those finishing rains that we need to see. And of course, really no frost risks for the next 2 weeks. And after that, it becomes too late. So we do not think the USDA trims yield much at all, but if they do anything, maybe it is lowering just a bit. But again, it's demand, I think, in the soybean market specifically that's kind of offsetting this. 10-day forecast from the European model also just kind of continues this generally arid pattern. So I think something we will be watching for is if, September we do get, one final, maybe 2 rain events, Illinois and all points eastward. I think that's going to be a big deal. It is in the forecast again in the 11 to 15-day period, but does that get pulled into the 10-day period is going to be pretty key. We'll know more about that in the next, 48 or 72 hours. Otherwise, I just kind of wanted to highlight, Mother Nature's performance outside the U.S. globally, and it seems to be doing very, very well. Mother Nature is cooperating in almost all countries, especially the exporting countries. So ABARES in Australia, they give us a quarterly crop report. The September report was out overnight, and they raised production relative to USDA about 2.8 million tons for wheat production. And this makes sense. something we have highlighted intermittently is just how much rain has fallen almost in all areas except for maybe South Australia the last 30 days. Abnormally heavy amounts, and then there is rain in the forecast for the next 2 weeks. This goes back to the absence of any Nina or Nino. Things look very good in Australia weather-wise, and on the right, this I think is validated. This production hike makes sense. And are they still too low by a million or two? That's kind of our idea, just given soil moisture and the Aussie forecast into the latter part of September now. And on the right, you see vegetation health compared to normal, isolated crop areas, some scattered areas, doing worse than normal. But for the most part, you've got some very, very good crop potential, especially in New South Wales and Queensland. I think those are going to be the places that really carry this crop up to 33, 34 million tons. This will be, if realized, the fourth year in history that Australia will be able to export 25 million tons of wheat or more. The wheat market, which has struggled because of demand already, I think is shedding premium because of this, because Southern Hemisphere wheat production should be very, very good. Kind of lastly, thinking about U.S.-Chinese deal, Chinese demand for U.S. soy products or really ag products as a whole, and something that we just kind of want to highlight is ignoring geopolitical issues. To us, it just does not seem like China's domestic markets are signaling the need for imminent larger supplies. The hog market, kind of the world's top meat market, doing absolutely nothing. Stuck at about 13,000 yuan per ton. It's been that way for 10 months now. Does not seem like there's a supply issue in China's meat market, and nor is there one in meal, at least judging Dalian futures. So the Dalian meal market today, $422 a ton. A year ago in September was $441, and you can see peaks, $634 to $650 a ton. Those are years that China needed lots of soybean imports. Just looking at China's domestic market, it does not seem that China's going to be growing soybean imports anyway. So it's something we've got to keep in the background. And again, kind of underscores this demand concern we have in the soy market. And then monitoring corn's chart pattern. We'll see where we settle today. Close below 414 or so is bearish. Next resistance is at 430. The market has done well to take out, initial chart resistance. How does it perform this week? As now, I think almost the beginning of Midwest harvest is just 30 days away. So how does the market evolve as we see this incredible replenishing of physical supply? So we still have, I think, more concerns than optimism in the grain market. And it's just having lots of supplies and no world weather issues. So keep that in mind as you're thinking about, of course, risk management. Do you reward rallies, things like that? And we still think the answer is yes.
Absolutely, Ben. And we did late last week on the rally, so it makes sense in our mind. We've got a harvest ahead. The world feed wheat market this morning is at somewhere around $210, $208 a ton. So feed wheat is as cheap or cheaper than corn. Never a good sign for the corn market when you can sell feed wheat at that price in the world. And the spread between milling wheat, 12.5% pro, and U.S. corn is only about $19 or $18 a ton. Let's call it 50 cents a bushel. Again, not workable in terms of feed, but still a concern. And that's the problem of the world wheat market in terms of what it means to corn. Everybody have a great day on Tuesday. We'll look at StoneX coming out later today and have ideas for what it means tomorrow. Good trading today, but the market sure have a bearish feel as we start out here this morning on the lack of Chinese interest. Be well, everyone.